Okay, so year 11th today, we are going to start with accounting for credit transactions. So previously we finished our cash receipts and cash payments journal, but today we are going to talk about our sales and purchases journal. Okay, so these are our credit transactions because when you sell or purchase goods on credit, that's when you need to put the transaction into the sales and purchases journal. Okay. Now mainly because we are talking about the small business owners, mostly they would sell the services or products on cash. However, if they do decide to sell them on credit, they will go under the sales and purchases journal. Okay. Now when you're looking at sales and purchases journal, there are different source documents to record those transactions. Okay. Now cash flows, which means the cash receipts and payments journal, use receipts, checks and EFT details as source documents. In credit transactions, there's a little bit different source documents because they include more information. Okay. Now with these source documents for invoices, they should include the name of the customer, okay, date of the transaction, so name, date, cost per item and GST applicable, okay, total of the invoice, okay, and the credit terms if any. So credit terms of the transactions, we're going to discuss that in a little bit more detail. We have already when we were at school. I'm going to show you again what the credit terms could be. Okay. Now the types of invoices, again, they're sales invoice and purchases invoice. Okay. Now sales invoice goes into the sales journal and purchase invoice will go into the purchases journal. Now sales journal is your accounts receivable. Okay, and it is a current asset. Okay, and purchase invoices when you're purchasing goods from other supplier, so you need to pay them money. Okay, so it is counted as accounts payable, which comes under your current liability. Okay, now let's talk about a little bit about credit terms. As an invoice is used to verify a credit transaction, it is important that the customer is informed of the time granted to settle their account. Okay, now credit terms is when the customers need to actually settle their account. Okay, now we've talked about some of the credit terms. So if you look here, credit terms are usually stated as follows. So 5/7, which means that if the customer makes the payment within 7 days, they'll get a 5% discount. Okay. However, n is equal to 30 means the number of days to make the payment is 30 days. So they need to make a payment by 30 days, but if they pay within 7 days, they get a 5% discount. Okay. And if they make a payment on the 8th day, they still need to make the full payment. They won't get the discount. Okay. Now sales journal. Okay. So if you decide to buy or sell on credit, the single entry accounting system will have to be expanded. Okay, so because we've talked about this is single entry accounting system can be done by the person who is actually into the business, so they need to expand it a little bit. So they need to have sales journal and purchases journal. In order to keep that record, they also need to keep a record of what payment is due from which supplier or which customer. Okay. Now sales journal will have these items in there. So date, again, date is the most important thing. Accounts receivable, which you'll have the name of the person who you have sold the goods to, name of the person or business. Okay, invoice number, amount of sale, GST and amount accounts receivable. Okay. Now all details of the sales invoice must be recorded. The name of the accounts receivable should be noted. Name of the accounts receivable is the name here, name of the business or individual person, along with the amount being charged. Okay, the GST being charged and the total amount owing by the accounts receivable. Okay, so you need to make sure you've got all this information on hand before you actually start putting the entries down. The records for accounts receivable. Okay, Once goods or services have been provided on credit, it is also important to keep track of how much each credit customer owes the business. Okay, so accounts receivable or sales journal will give you a rough figure of how much is due from different debtors or people who you've sold the goods to, but you also need to keep an individual record of who owes you how much money. Okay. Now I'm going to show you that as well in an example video, which will be the next video after this. But be mindful that even if you're doing a sales journal or purchases journal, you still need to keep the individual record of the customers or the suppliers, so you know how much money you owe to a particular supplier, or how much money does a customer owe you, so how much your customer needs to pay you. Okay. Now this is the record for accounts receivable. So for example, this is B Waldron account. On 4th June they had sale, invoice number this, amount this, and balances total this. On 8th June there was a sale again, invoice number this, amount this, and this is the running balance. So $2,200 plus $1,100 is $3,300 here. Okay, so if you keep looking at the balance here, it's the running balance. Okay. Now then they made a payment of $3,300. Okay, so they made the whole payment, which means the balance has become nil. So they don't have any money due at the moment. Okay. Now again, accounts receivable schedules. Having introduced a sales journal and the relevant records for accounts receivable, it is common practice that at the end of every month, a schedule of accounts receivable is prepared. Okay. Now you need to make a schedule of accounts receivable, which will have all the names of all the customers, and the amount next to it. Okay, I'll show you that example in the next video. This schedule lists all accounts receivable with their current balances and provides a total amount owing ready for reporting in the balance sheet. So this is really important bit here. So it shows how much money is due from each accounts receivable. It also gives you the total amount owing, and that total amount owing goes into the balance sheet as accounts receivable. Okay. So these account receivable schedules are really important for you to have a figure that actually needs to go into the balance sheet. Okay. Let's go on to the next slide. Now this is how accounts receivable schedule looks like. So you'll have a sales journal, you'll have the entries in different names. From there you'll pick up every supplier and put the total amount in here. Okay. So WAS $1,200, C Conroy $2,800, D Wilson $4,000, and A Gilbert $2,000. So this is the amount of money that you need to get from each of these individuals. Okay, and the total amount of owing is $10,000, and this amount goes into the balance sheet as accounts receivable. Okay. Now you should know that accounts receivable go under the current assets and accounts payable go under the liabilities. Credit purchases and accounts payable. Now as we did sales, we're doing purchases now. So if a business purchases goods or services on credit, there will be a further modifications required to the accounting system, so they need to make a purchases journal. Okay, again the purchases that only are done on credit goes into this journal. Otherwise if it's a cash purchase, it goes into the cash payments journal. Okay, now if it's a credit purchase, this records all details of purchase invoices issued by suppliers providing credit. Okay, now again this credit purchases journal, the statement will go into the accounts payable because this is our creditors, we need to pay them money, so this is our accounts payable. Again, a schedule of accounts payable needs to be made as accounts receivable schedule. I'll show you that in the example video as well. Okay. Alright, that was all for theory for credit, sales and purchases. If you have any questions, shout out and I'll answer your questions. Stay tuned for the next video. Okay. Good luck. Bye bye.